Good morning, ladies and gentlemen. Welcome to our show here. We are on week 3 of our Customs and International Trade Festival. This time we are presenting on export control, one of the most important items recently. I'm not alone. I will invite you to the speakers in a few seconds. But if you have got any questions during the presentation, please use the chat functionality. And of course, we have the Q&A session at the end. So please do not hesitate to ask questions. Next slide, please. Thank you. Today we have got a very short agenda. We have a short keynote by John O'Loughlin, which is the Customs and International Trade Partner in Ireland. We will have a panel discussion on different scenarios, and at the end we will have a Q&A session, which we will see if Mieke, our Customs and International Trade specialist in the Netherlands, will share with us. I think there seems to be a small technical problem, which we will solve during I'm speaking. And you may also have noticed that we've got Christine Frankenberger with us. She is our Customs International Trade specialist in Switzerland with a special focus on US export control legislation. So thanks for attending this session here. And as you see, Mieke gets a little bit red in her face because of technical issues. You might understand this is a little bit stressy. But Mieke, don't worry, we have plenty of time, we're not in a hurry. And by now we will see the presentation back again. If it's like in this format, just
in the right format or not?
We can also use this format. Maybe you can enlarge it a little bit, but we can also work with this.
Oh, sorry. I'm really sorry. I will try to.
Yeah.
We practiced it.
That's normally the situation where we're introducing all our children, which are running in the back. So don't mind. We will fix this.
Yeah.
As said, we will start with a short keynote from John O'Loughlin. And maybe, John, please take over. You can make some first introduction of yourself and giving Mieke a little bit time to fix this.
Super.
I think it's fixed or not.
Yeah, it looks like it's fixed, Mieke. Perfect. So, very good morning to everybody, wherever in the world might be this morning. My name is John O'Loughlin. I'm a partner in PwC Ireland with responsibility for global trade and customs. And one of my areas of specialism is the whole area of export controls. So it's a very nice and sunny morning here in the west of Ireland. Hopefully it's sunny and bright wherever you are as well. Over the next few minutes, just going to give a very quick brief introduction to export controls, some of the main issues associated with it, areas for consideration, and what we're seeing day to day as we support companies across various different industries. Today's session and the attendees, it does seem to be an intimate session. So I would encourage you, as Michael said, to use the chat function to ask questions, and hopefully, based on the time that we've allocated to this session, we'll be able to answer as many of those questions as we possibly can. If we don't answer your questions today, we're certainly, we will commit to come back to you on a one-to-one basis and address and liaise with you on a one-to-one to address the questions that you might have. So one way or the other, today or on the call or subsequent to the call, we will be in touch with you. So sometimes the question gets asked, what are export controls and why are they important? Are export controls associated with customs? And I suppose the simple answer to that is that they're a first cousin of customs and customs controls. But in effect, export control is very much a regulatory area. And what export control is designed to do is control the movement of very, very sensitive items, products, technology, and software. So unlike customs, where we're only associated with tangible products you can feel, touch, and see. Export controls also covers intangible movements of software and technology by way of cloud upload, server movements, email, etc. And we'll talk about that a little bit later on. Dual use items are effectively the main products that export controls are designed to cover, are those products that have what we call a civilian and military use. So they're used in everyday environments, from running manufacturing plants to controlling how the internet works, to being used in production facilities, but also those products, if used and received in wrong hands, could be used for fairly scrupulous reasons. And that's why governments and legislation are in place, or why governments put legislation in place to ensure that there are controls around these movements of very, very sensitive products and items. In addition to dual-use items, export controls also cover the movement of military goods. So those products, software and technology that are specifically designed and modified for military use. So again, oftentimes civilian and very specific products are not controlled, but when they're modified or designed for military use in any military application, they can also be subject to control. And how governments manage export controls is by way of licensing. And governments put in place strict licensing regimes to effectively control national security and foreign policy interests, to make sure that, again, very sensitive products don't get into the wrong hands. But it's not all about the products. There's controls around the end use, so what companies may do with the product, the end user in terms of who receives the products, and then measures around the shipment to certain very, very sensitive destinations, and we call those embargoed controls. Controls in the area of export controls are quite sensitive, and companies treat and take this area quite sensitively, because the risk of getting it wrong and the reputational risk to an organization of breaching export controls is very, very high. In the EU, across all the 27 member states, we have legislation that's governed at an EU level to effectively monitor and control and put legislation in place. So we have a very common policy by way of an EU regulation across the 27 member states, and that's further supplemented then by national legislation and national guidance. The industries that are many companies on the call today cover from military defense contractors to chemicals, information security, telecommunications, aerospace and defense, etc. But also covers products in the financial services, manufacturing, industrial products, pharmaceuticals and life sciences, etc. So it's not just one industry, it's not just one area. It covers a vast amount of products, and more we're seeing more companies being affected by export controls, and companies, I suppose, not struggling, but really trying to understand, do export controls cover their products? It also covers products that are not just for sale, but products that are used in terms of tech transfers, capital equipment, and products that are just transferred from one part of one organization to another, etc. So move from one country to another. What are we seeing day to day? Well, we're seeing a lot of companies struggling with export control classification, so determining whether their product is subject to control. The companies looking to simplify their licensing process, determining which company within a supply chain is actually responsible for export controls. So who is the exporter? We've seen a lot of companies undertake internal audit reviews. We've seen divergent views between understanding, and Christina will talk a little bit about this, between EU and US, and then obviously having internal controls to be able to support all of that. So, you know, that kind of sets the context for how export controls actually works. But simply speaking, on this slide, the starting point is controlled products crossing an international border, and what steps do I need to undertake? So Mika, if you just move to the next slide, we break this down into kind of very simple questions and simple steps. What is your product? What is the destination? Who is the exporter? What will they do when they receive the product? And what could they do with the product in terms of potential diversion, and ultimately who will pay? And simply speaking, from an export control perspective, if we can answer each one of those questions, it will show that, one, we have internal controls within our business. It will show that we have the right information to make a decision around the licensing determination, and it will certainly reduce the risk of sending products without licensing to very, very sensitive destinations. So companies like yourselves will have controls and procedures around all these areas. But oftentimes the starting point is, what is the product and where is it going? And that ultimately helps you make real informed decisions around the licensing determination associated with your business. If you go on to the next slide, Mika, please. How can an export take place? And I referred to this earlier on in terms of various different types of movements. And we oftentimes in the trade compliance world, we spend a lot of our time focusing on customs and customs controls, movement of physical products across international borders. But as I said at the very outset, from an export control perspective, it's broader than just physical products. It covers the physical movement of product, but also the intangible movement of product, software and technology by means like email, by sending information via apps or through your IT department, tech transfers occurring via very sophisticated technology methods, via the cloud, via mirror servers, via server upload, download, collaboration projects that exist within organizations between research and development teams that work cross border, accessing and making available information on servers to individuals, companies, etc., located all over the world. And certainly we would see day to day in our world companies really struggling with the whole intangible, a little bit more sophisticated and a little bit more difficult to manage. But I think today it's important to know that it's just more. It's more than just a export by physical means. It also covers intangibles. And if we think about, you know, when I started my career in the whole area of software, we had the disk, the compact disk, or we had the dongle, and you know, the software was loaded on the disk. It was put into a box or a bag, and it was exported, and we had physical movement. Those days are long, long gone, where now we just provide a license key, and the license key enables a customer, a company, to download a piece of software, to upload it onto a server, to make it available through its enterprise system to perhaps multiple companies, multiple users globally within an organization. So that becomes a real challenge to how to manage that. It raises the question around who is the exporter, from which country, in which country do we get a license? So I suppose that's where we spend a lot of our time, figuring out all those real, I suppose, complex areas in supporting our clients. If we move on to one step again, Mika. And it kind of brings in the whole area, which Christina will talk about, is the extraterritoriality around companies. And if you look at export control, I'm sure a lot of you on the call today are either working for US multinational companies, are subsidiary of US multinational companies, or are EU-based companies that perhaps have US subsidiaries. And we often make two big mistakes when it comes to export control from a US perspective. One is we think that export controls only applies to US companies, and that's a big mistake. I've often gone on calls with US companies and we're talking about the EU, and we get really, really fantastic narratives around the types of controls that are in place, the types of licenses that exist, the license exceptions that exist around encryption products, etc., why export controls doesn't apply in the EU. And then we have to remind the company that that is absolutely correct from a US perspective. But we also have to consider the country in which the goods are exported from, and that's oftentimes the the EU, could be Malaysia, could be Singapore, could be Brazil, could be Argentina. And the fact there that not only do we comply with US controls, but we also have to then comply with the local controls that exist in those in the country where the product has been exported from. So the extraterritoriality is really, really important. But it's not the only consideration that you have to look at within an organization. So, you know, most of you that have US subsidiaries, export control is probably high up on the radar. Those of you that are subsidiaries of US companies, I'm sure. But let's not forget the local requirements that exist in each organization. If you just skip on, Mika. In summary, and export controls at 100 miles an hour, and I know Michael, Christina, if you just maybe just go back one, thanks, Mika. Michael, Christina, and Mika, over the next few minutes, are going to walk through some somewhat simplistic scenarios, but show that simplistic scenarios are not so simplistic. And there's a number of considerations that need to be considered within the supply chain. So real important, have the right resources within your organization. Ensure that you monitor and take account of changing legislation and monitor the movement of products, physical products, technology and software, and make sure you've got the right support within your business. On the right hand side there, you'll see kind of what does good look like. Having management commitment from the top, having a right organization and governance structure, ensuring people are trained and have adequate knowledge around export control, that the procedures are documented, there's appropriate screening and adequate screening in place to make sure that the right product is going to the right destination, and you've right security controls in place, that you audit, you've a system of I suppose, reporting to the authorities if you make a breach, and you've appropriate record keeping. And that's done around a system of product, destination, end use conduct, financial screening, etc. So all those are fundamental elements of what good looks like in an export control environment. So hopefully that, Michael, has set the scene in terms of a high-level overview of, I suppose, export control and the importance for organizations.
Yeah, thank you, John. Maybe we can stay here because we already received the first question regarding this. The question is, we basically understood all these export control challenges, but how should we cope with this? Is there really a need to use an IT system? And maybe you can start, and then maybe I can comment also on this.
Yeah, thanks, Michael. I think the starting point is proportionality. The controls need to be proportionate to the business and proportionate to the risk. And where does an IT system fit in? Well, certainly an IT system can help, particularly where you have large volumes of transactions that are moving, and helps you make the decision around whether products are subject to control or transactions are subject to control. So a lot of companies would, in some respects, have IT systems in place to help with the license determination process. But those systems range from systems like Oracle GTM or SAP GTS down to some more bespoke boutique type software solutions. But other companies have export control risk within their business and are able to manage it, I would say, somewhere offline. But that would be by reference to having a very small number of transactions to a very small number of countries. So I would say it's all about proportionality, and the controls that you put in place are proportionate to the risk and the volume of transactions you have within your business.
I would fully agree. It depends on the type of business you're doing. Sometimes you can do it a little bit more in a manual way. Sometimes if you're talking about high volumes, many clients, I guess you need some kind of IT system. This does not mean that you definitely need to have SAP GTS as one of the biggest systems in place. You can also use different systems. Maybe I put a little bit focus on screening. So there are regulations in place prohibiting the trade with some companies, with some organizations, with some natural persons. I guess this is something where you should use an IT system because it is burdensome to collect all this information by a high number of clients. And please also take into regard that the regulations are constantly changing. Therefore, for screening, this is, from my perspective, important. And maybe to add one aspect, and it is not decisive where the customer sits. It could also be a new customer because some EU customers and companies are mentioned in this list where trade is prohibited. So it does not depend on that the customer is sitting outside of the EU.
Agreed.
And I think it is best standard not only to screen based on EU regulation, but also on US regulation. And some of our clients also take UK regulation and Japanese and Australian regulations in place. So this can, I don't think, not be done.
Yeah, and I think what happens, Michael, and it was the error that's made is some people are using, a list by way of a control find function. So they will say, who's my customer, go into a list, do a control find, and if it's not a direct match, well, then they move forward. But what the more sophisticated screening systems have is that they're not screening against one list. They're screening potentially on multiple lists across the globe. And they have algorithms built in to look at various different functionality with respect to, it doesn't necessarily have to match exactly. If there's a dash or a hyphen or a comma or something that's a little bit off, it prompts you to look a little bit closely then at that customer end user to make a decision. So I would say absolutely. There are, let's call it offline systems that can screen multiple end users at a time, and sophisticated functions are literally screening on a daily basis your customer list, your procurement list, and that helps you, I suppose, make informed decisions around the parties in which you're and who you're dealing with.
Okay. So I would say let's go ahead with the presentation. We will answer the question from Paul in the Q&A part. So Mieke, I think the next part is that we would like to discuss some scenarios which we typically see with our clients. And scenario one is that, for example, we have a US supplier who produces goods in the US and sells and sends them to the EU. To a manufacturing company, and afterwards the goods are supplied and invoiced to a Russian customer. As said, we are not only talking about EU, because from an EU perspective, but only from an EU perspective, it is burdensome. Because of course you have to check whether your goods are subject to export control. So are they dual use? Could they use for civil and military purpose? You have to ask yourself if the good is not listed in the dual use regulation. Could it be used, for example, for military use? Then it could be regarded as controlled too. The so-called catch-all clause. Sometimes we have this kind of constellations if the customer, in our case in Russia, is well known for its military end use. For example, everything you provide to Rosoboron export in Russia should be checked in detail, because Rosoboron export is the governmental weapon export company of Russia. So please do not stop by just saying, okay, it is not mentioned on the dual use regulation. Please take also into regard that it could be controlled because of its military end use. And at least from an EU perspective, we have the situation that there is an embargo in place because of the Crimea challenges we are facing. So have a look into the embargo regulation, and the embargo regulation is not only the question which items I'm allowed to export to Russia. It also mentions additional persons and companies which items should not or must not be provided to. So in sum, we've got EU regulation, we've got end use, we have got embargo for items and persons. And at the end of the story, please do not neglect the screening. So is there someone on the terrorism list or on any US list that is available? So a multi-functional thing you have to face here. But as said, Christine, our expert also on US export control law from Switzerland, might add also a little bit to this complexity. You're on mute, of course. You are still on mute. Nope. Okay, today is the day with the technical issues.
Excellent. I had to change my microphone because anyhow.
Okay, works.
Perfect. Thank you very much, Michael. Yes, from a US export control perspective, you may say that is not so important because we are in the European Union, but it is also a kind of an import control because if you received US controlled items without a proper license, there are certain requirements, and actually these items should be then quarantined, and you can't even use them for manufacturing anymore until you have an export license. So it's very important to know what you receive from the United States and if they are export controlled, yes or no. So when the export from the States, of course, to the EU is not an embargoed country. The US supplier has to check the sanctioned party list or denied parties list, and there are various different lists to check. The most important are the denied parties list, the entity list, and especially for Russia, the sectorial sanction list and the CAATSA, and I'll tell you later what CAATSA stands for. It's a little bit longer. And the charming thing of the US export control regulations is that they have the export control classification number, which has the same system like in the EU, but the number tells you if a license is required for a certain country. So it can be that exports from the US to the EU are no license required, but from the EU to Russia for the same items, you may require a license. This is contrary to Europe. In Europe, everything which is on a control list needs a license. That is absolutely important to consider that. The export control classification number, as I said, triggers a license requirement. And as a rule of thumb, you can say that if the number after the letter is the lower the number after the letter, the more restrictions apply. So if you have a ECCN which says 3A001, this requires a license to all countries of the world, maybe except Canada. The number after the letter also tells you if you have a military item or if you have a satellite item which is required for the satellites. If the number starts with a 5, it's satellite, and if it starts with a 6, it's a military item. The Americans had a big export control reform starting in 2013, where a lot of items which used to be on the US munition list moved into the lower regulated export administration regulation, and to mark them, they have a different number system. And there are additional requirements. For example, if you have a 500 or a 600 item, then these items are not allowed to be exported to a weapon embargoed country of the United States. If you have figured out that you require a license, then there are multiple opportunities to use a license exception. So there are material-based license exceptions, and you find their applicability in the Commerce Control List. There's a special mark on the license exceptions, and there are license exceptions which relate to certain activities like return after repair or temporary exports, or even for encryption. You have to check if a license exception is applicable, and then you can apply for a license as a US exporter. And here you have, again, two options. You can apply for the license as the manufacturing company being the end user, because they use that US origin part to manufacture something else. Or in case of a trading item, the US supplier can already mention the final end user in Russia. Then the manufacturing company doesn't have to apply for any licenses anymore, but they have to check if they really can use the license. That means, is the end user really correct? Is the quantity correct? And so on. if you do the classification and you figure out that it's not on the commerce control list, then your item is called EAR 99. And if it should turn out that your item is on the US military list, then you have certain additional requirements. So military items and all items which are on a commerce control list, when you have a real ECCN, they need to have a destination control statement in the invoice. So when you receive, as a European manufacturer, an invoice from the United States, and there's a destination control statement which says these items are controlled under the US government and authorized, blah, 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 then you know for sure that this item requires a license. It may not require a license for your country, but this is an item which is on the commerce control list. And the ITAR items have additional information like ITAR classification, end user, and end user country. It sometimes the people misinterpret the end user destination statement and say it's ITAR, but they are simplified, adjusted, but there are some changes there. If you happen to buy an ITAR item, and ITAR stands for International Traffic in Arms Regulations and is the US military regulation for the US military list, then you may step into a completely different world and a very regulated and very regulated world. ITAR licenses can only be applied for by a US party. A foreign party cannot apply for ITAR license. The ITAR seller needs to be registered at the Department of Defense Trade Controls. And in the ITAR license, the complete supply chain has to be mentioned. If one of the supply chain partners is not mentioned on the license, which is called GSP 5, then this partner is not allowed to receive that item. So you have to mention upfront to the supplier the all the supply chain parties. I said if the US supplier already knows that it's going to Russia, then they also have to check the Russian embargoes, and this is extremely complicated one, and you need to be aware of certain payment terms. You have to be aware of the additional OFAC lists, and if the item is then arrived at the European manufacturer and he uses that for incorporating it into a new product, then the extraterritorial US requirements require that you do a so-called de minimis calculation. So to work out how much is your US content in your finished product. And that's not only based on US origin items, it is based on US controlled items. That means all the items which require a license for shipments to Russia need to be calculated, need to be added, all the values have to be added and had to be put into relation of the sales price. So the US regulator says fair market value, which is a very narrow, very broad definition, and usually the companies take the purchasing price and compare it to the sales price. And you have to be very careful when you work that out, because whenever you give larger discounts, then please bear in mind, by giving a discount, your US content rises. And so sometimes it's better to be under these 25%. In case you are above 25%, that means you have to classify your end item according to the US Commerce Control List, besides the Annex 1 of the European Union. And in a worst case, you may need 2 licenses, one from your European authority and the other one from the United States, from the Bureau of Industry and Security. And you may get one license and the other one not, but you need both.
So Christine, I would say I would say our first idea that this example is too simple to be discussed. I think it turns out indeed that it is not as simple as it looks like. I think the decisive facts here in this example is that the supply is from the US, and that indeed at the end of the flow there is a Russian customer. So to say, for this scenario, I would say complexity is clear. And having a look at the timing, I would say let's move to the next scenario, where it's made a little bit more complex because another country appears there, which you might know.
Yeah. Well, we can continue here basically because the manufacturing company is the exporter of record of the goods to Russia. So they have to apply, they have to comply again with all the US re-export regulations. They have to check the Russian embargo. They have to check all the denied parties. They have to be aware of any payment terms they give to the Russians. If it's subject to, if it has more than 25% US content. However, even if there is no US content or it's below 25% and the payment is not on US dollar, you may step into trouble with the United States with the so-called secondary sanctions. So if you are providing a substantial business to a Russian entity in the oil and gas sector, and I think also in the government, then you might be targeted by the US. So please bear in mind all the trouble with the Nord Stream 1 pipeline, especially for the pipelines. If you provide goods or services to the Nord Stream 2 project, then you are in danger to be on a sanctioned party list from the United States on the special designated nationals. As a Swiss party, principal party involved here, you have no goods flow, so there is no license requirement for the export. However, there is a license requirement regarding the Russian embargo, and the Russian embargo, by the way, in Switzerland, it's not really an embargo, it's measurements in order to avoid bypassing the European embargoes. But at the end of the day, it's basically the same. They already prohibit the sale, not the shipment, the sale of certain items to certain entities, especially with regard to gas and oil and offshore oil exploration and so on. So you may end up in a 3 license requirement. You have the US, you have, of course, going to the European Union, you have the re-export, and you have Russian embargo requirements to consider here from Switzerland.
Okay, yeah, then I will touch base on the European part, because this example, and especially taking Russia as an end customer, can have a lot of difficulties. But because the goods are from the EU shipped to Russia, you also have to take into consideration the EU export control restrictions. So what is said before, have a look at the product. It's not only on the weapons and embargoes or the gas and oil industry, but due to the embargo we put on Russia, it can also be products for food products. So please keep this in mind. It is not only products that can be used in for military purposes, but with Russia, it is also some food products. It doesn't says that you cannot deal with Russia at all or with other countries. If you have considered if your product is controlled, you should think if you can apply for a license. A license for exporting the goods can be obtained at the authority your company is based. In this respect, we have a bit of a problem because the goods are owned by the Swiss principle. It is a non-EU entity, and in general, the situation is that you should apply in the member state of the EU where you are established. As the principle is established in Switzerland, there is no establishment within the EU, and you should think if the manufacturing company can apply for such an export control license. So this makes it a bit difficult, but it is still possible, and then you can export your goods having the correct export control license in place. So yeah, this is really, how do you say it, a complex structure, but it doesn't mean that you cannot do business with Russia, or you always have to apply for a license. Please always check the first step, is my good controlled based on EU, US regulations, because we have to follow the flow of goods and not only the flow of invoices. And if so, can I apply for a license so that I can ship my goods? Not sure if you have something to add, Michael or Christine.
No, what is very important with the Russian embargoes is that not only the shipment of the items is under controls, but in here it's already the sale of the items. So this is also the reason why the Swiss have a license requirement. Any sale of items on a special goods control list for Russia have to be reported immediately to the authorities. So not the shipment, the sale. And this is the same in the European Union. And that is absolutely different to the usual export compliance processes, where it's always the export of the item. So here the checks have to start much earlier. They have to start already with customer relationship management and quotations.
Okay. But I think then this is sufficient for this scenario, also taken given the time.
Yeah.
Then I will proceed with the the next slide. As John mentioned before, we are now also faced with cloud servers, and the challenges we have with them, also with respect to export controls. Yeah, we as a customs specialist are more or less always focused on the movement of goods. However, export control is also subject to movement of data and movement of knowledge. Not physical, but via the cloud. So also bear in mind, if you upload something to the cloud, that might be seen already as an export in case foreign people can access your data. It can also be that you need to apply for such a license. Just putting some technical control data. Please bear in mind, you always have to first check, is my data controlled or not? If it's not controlled, you don't have really an issue. But if it is controlled data, please check who can access my data. If it's, for instance, a Dutch person who is in the Netherlands, then there is no export. But if also your colleague of your colleague can enter that data from the US, then there is an export, and then you need a license. This is a bit vague, and how we understand it, it is not important where the cloud or the server is located, but where you can access the data. That only counts if the server or the cloud server is well secured. If it's an unsecured server, then yeah, you always most of the times you always have an export. But if you meet the security criteria, there will only be an export if someone outside the jurisdiction you're located in or whether can enter that data. There are also licenses in place, and very general licenses in place, to make it possible to upload the data without any penalties or something like that. So this is becoming more and more important, because what we see in practice is that from the on-premises software solutions and all the tech data is included in there, everyone is going more and more to cloud servers, and with all the mobile changes. So you can see that you can enter for instance, we can enter our mail wherever we are, and it can also be for your company. They can enter your databases from the location they are going to. If they need to do an installation outside our jurisdiction, they can probably also enter via a secured gateway the tag data. But if that is outside your jurisdiction, it is an export. So please keep that in mind. I'm not sure if you have anything to add, John, Michael, or Christine, or then we can go to the Q&A.
Because sometimes we are asked, is it worth to put it into the internal guidelines of a company? And yes, it is. This is typically in the section employees traveling abroad, taking items with them, having access to intranet. Is there a possibility to download and so on?
Yeah, indeed. Fully agree.
Yeah, and I think, Mika, it's an area companies have struggled with. You know, it's not easy. You know, you have to kind of liaise with the IT department, the delivery team, to get all this information and to effectively apply the export control legislation or overlay the export control legislation on top of it. So it's not easy. Companies do struggle with it. So, you know, if there is anybody listening here to say we're not on top of this, well, you're not alone. That's the critical thing.
Yeah.
That's true. Okay.
So John, next slide.
So I suppose the main thing is, so what? So we've talked about export control. So what? Why is this important? What happens if this goes wrong? And I suppose the critical thing here, and we talked about US companies and US controls earlier on, this is taken seriously. This gets front page attention in newspapers, in media, in publications. And we've seen over the years the fines that have been issued and the sanctions put on companies for breaching US and EU export control legislation. The most critical thing here is not necessarily the fines and penalties, but it's the reputational damage, the disruption by way of loss of license, blacklisting, reputational issues, loss of business where companies are not prepared to deal with companies that have breached export control legislation in the past. So this is non-negotiable. It is important. And generally speaking, when this goes wrong, it gets attention at the C-suite, at the board. And most often than not, companies will have management commitments and governance procedures in place to deal with violations and to deal with sanctions associated with it. So it is important to get it right and get it right first time and every time.
John, maybe to add, because it's a very popular question, which I received upfront of this presentation. How about fines? Are they different in the EU? Maybe I start with Germany. The fines are based on national law. We have a maximum monetary fine of 500,000 euros per case. This is a maximum fine. With or without imprisonment. So it is one of the highest administrative fines Germany put into law.
Yeah, in Ireland, Michael, our penalties can be up to 10 million in terms of breaches for criminal offences, and obviously imprisonment as well. For those those responsible for the breaches and the directors of the organisation. So again, similar to Germany, that's based on national law, and we're recasting. There's a new piece of legislation to come out in Ireland quite soon, and it's actually going to introduce penalties, not necessarily for criminal, but more civil-based penalties to cover simpler breaches, but to act as a deterrent, so that monetary penalties can be put in place for smaller breaches rather than just being criminal in nature. So that legislation is due out this year.
Okay. Okay. Some other comments. Christine, in Switzerland, there are no fines. No. Okay.
There are fines. They go up to 1 million and imprisonment. And if it's That's not intentionally, that just administrative mistakes. Of course, they go much lower. But also the fines for embargo breaches are, I think, up to 500,000.
Okay. Mieke, any idea about the Netherlands? You're the flexible country.
We are always a flexible country. We just talk about it and then it's okay. We mediate. No. The same goes here. It's on national legislation. To be honest, I don't know what the highest amount is. Because to be honest, I don't think in the Netherlands ever the highest amount has been imposed on a company. But it's also, there is an administrative fine, and it also can go to imprisonment of the directors of a company. So that's indeed the same as in Germany and in Ireland, I think. But to be honest, I'm not sure what the highest amount is in the Netherlands. It's based on national law.
Yeah, but I would agree. There are rare cases where they really take the maximum amount. However, in Germany, they asked it for the directors as a personal issue, and this there is a high motivation for the board of directors not to get involved into this kind of personal fines.
Yeah. And to be honest, what I see in the Netherlands, what happens often is that they revoke their licenses or the authorization, and that is more often a bigger penalty for companies than an administrative fine.
Yeah.
So,
fully agree.
I would agree, Mieke, and that's what we've seen in Ireland. You know, it's very rare that you'd see somebody going to jail and administer a penalty, but I have seen revocation of licenses at quarter and year end. And in very simple terms, you don't have a license in place, you're not in business, and that will get attention very, very quickly within an organization.
Yeah.
Okay, then I would propose that we are starting with our Q&A part, and there is a question that came in for Christine. Where is it? Can non-US entity apply for a license for the 500 and 600 series?
The short answer is yes, they can.
Yes,
You
they
have
can.
to, everybody outside the US can apply for EAR licenses, and 0600 and 500 are under the Export Administration Regulation. You have to register at SNAP-R, that's the electronic system of the United States, and then you can apply for the license, and you get electronic license which you can file and use, and that's it. It's contrary to ITA. In ITA, only the US party can apply for the license.
Okay, so the second question in this regard, application should be submitted via SNAP-R. This is the electronic filing, I understood, which should be used.
That is like ELIC in Switzerland. What's it called?
ELAN-K2.
ELAN-K2 or England, they have in the UK, they have another system. It's the electronic licensing system.
Okay, next question, maybe John, you can start with this. Are there tips and tricks how to deal with a large product portfolio? For example, 300,000 spare part numbers, plus minus 1,000 HS codes to check for dual use, for example.
Yeah, there's no short answer. It's an exercise that has to be undertaken to determine the ECCN or control list number of those items. Depending on the industry that you're in, certainly there's shortcuts to take to kind of make that decision, particularly if you're in a business, a retail business, where a lot of it's consumer facing. So a lot of those products are available by retail sale. If you're in a more industrial products type business, then you are looking at the characteristics of the product. Now, you can probably break those characteristics down to potentially looking at some very, I suppose, smaller number of classification codes to see whether the specifications of the parts or the finished products meet those control parameters, and try and narrow it on that basis. Furthermore, there is a correlation table to help, for where you can take the HS classification codes and correlate them to control list numbers from an EU perspective. And that helps you narrow down and focus your attention. But there's no quick answer, there's no quick solution. And I would say it's very much industry based. There's some industries that this will be an easier exercise to undertake than others. But to kind of pick up, spare parts are as controlled as finished products. So there's no shortcut or exemption for spare parts. They have to be looked at in the same way. And oftentimes your spare part may give you a bigger risk than your finished product by virtue of the technical specification of that spare part. And one other item, maybe Michael, just to add, perhaps you're a company that buys a lot of product from third parties or third countries. This predominantly exists in the technology and information security space. So you have companies out there that buy software or hardware from OEMs, or original equipment manufacturers. Some of those companies publish their ECCNs and control list numbers online, and you can potentially avail and get the information from the OEMs. Now, the caveat there is, are you happy and satisfied that the OEM has classified their products correctly? But it is often a good starting point and can help in the classification process.
Yeah. Maybe in addition, we at PwC, we have a shared service center for classification, which is also capable in dual use classification. This is maybe a second approach. Maybe a third approach is we've got DNA managed services in place with PwC, where we can, for example, check if the 300,000 spare parts indeed are actual items. Sometimes clients come to us and say, well, we've got 1.5 million items, and then it turned out that only 20% of them are real and live. So this might also be a strategy, first to minimize the number and then perhaps work with the shared service center on this.
And Michael, I just finished a project where we classified 150,000 items from an export control perspective, and a number of those we broke it into various different categories, but the vast majority of those products we were able to classify by description. So it was nuts, it was bolts, it was cables, it was very low risk items that we knew based on the specification and our understanding of the control list number that were never going to be classified or controlled. So sometimes you can classify the initial list by description, which gives you a smaller universe of items then that you classify by more in-depth analysis together with your engineers. So again, once you look at the universe of items, you make that decision of what the best way to do it is, but you can take it in various different stages as opposed to trying to do this all in one go.
Okay.
And just as a small side, you happen to find an item on the control list which matches your product, don't stop searching, because there might be associated software, there might be associated technology, and sometimes like components are controlled and the final item too. So we just experienced with a client who is in the electronic industry that the components of the final end item are controlled, plus the final end item, and they just didn't continue searching the commerce control, the control list, and got into trouble.
Okay, maybe the last two questions, and Mika, maybe you can answer them. Question is it a good idea to certify, respectively, review my export compliance management system? And a similar question is, how often should some kind of internal audit review be conducted? Maybe you can elaborate a little bit on your opinion.
from when you look at the first question, can we certify our internal compliance program? At least that's what I understand from the question, Michael. Yeah. In the Netherlands, there is no authority that is certifying your internal compliance program. No one, the companies are doing that, but none of the companies is approved by the Dutch customs authorities, as that is the sole company that can certify your internal control program. However, I think it is a good idea, but it's also what John mentioned in the first part. How big is your export control business? If it's just a small business, I don't think you should exaggerate your internal control program and your certification of that. But if your company is dealing a lot with sensitive countries with sensitive products, it is wise to have a check of your internal control program, compliance program. And your second question was
regarding internal audit. Should it be should export control be part of internal audit?
Yeah.
And maybe how often? Is it once a year, twice a year, or every 4 years, or whatever?
No, I would say every year at least. And if you have what I mentioned before, if you have very sensitive products, sensitive customers, take it into your internal audit control program. So not as a standalone control, but just do it on a regular basis, or combine it with other checks an internal audit team is performing. But you should always have a look at how many shipments do you have, how many export control issues do you have, and that take into consideration to make a program around it. It should not be only once every 5 years, every 4 years, but every year. And if it's very big part of your business, put it into a regular controls.
Okay, great. So these were the questions we received online. As said, if you have additional questions, just unmute yourself, and we are happy to answer everything if possible. Okay, just a second. Question is, in some countries, certification is obligatory if the company trades with military items. That is PL case. The government sets up rules and lists the approved certification bodies.
I think that's in Poland, Michael, and I think that's
okay.
Yeah. And I think maybe to pick up on that, I suppose the difference between dual use controls and military controls. Dual use controls are built off an EU regulation that's applies across the 27 member states. But from a military perspective, it's based on national legislation. So there is national discretion both in the EU and across other countries to adopt their own position on military controls. So it is the case in certain countries that in order to trade in military goods, advanced certification and agreement with the regulator, which is often the Department of Trade, is actually required. I don't have a list of countries where that is the case, but it is a position I've seen in other member states and across the world where such a scenario exists.
Yeah, it's basically the same in Germany. It is a national law, and as we're talking about weapons and everything above, I would call it, there is strict overview by government. Also with certifications, sometimes you are only allowed to receive this kind of items if you are certified. Okay. Additional questions? Of course, you can put them into the chat functionality or just unmute yourself and ask. Okay, seems not to be the case. So I would say thank you for attending. I would say also in the name of Mieke, John, and Christine. Maybe you can go to the next slide, Mieke. Here you can see the contact details. If you want to discuss something with us, just give us a call. And maybe, Mieke, you can go to slide 2 or 3, perhaps. And the reason is, on this slide, there was a printing error. And it was very unpolite towards Christine Frankenberger.
It's also on the first slide.
It is
Sorry.
also on the, okay.
Sorry.
So you will still remember Christine Frankenberger from Switzerland because of the misspelling. However, the presentation, I think, will be sent around to the participants, and until this point in time, we will have spelled her in a correct manner. So thank you for your time. Hope you have a good day. Stay healthy, and see you soon.
Thank you
for
all.
attending.
Bye-bye.
Thank you.
Thank you.
Bye-bye.
Bye-bye.